Hey everybody, Brian Shannon here from alphatrends.net. Today is Friday. It's the 8th of May, 2015. Let's look at these markets. S&P 500 finished with a gain of about 0.5% this week. Nasdaq down slightly. Semiconductors kind of dragging on them a little bit. But the Russell 2000, the financials had a really nice week, and biotechs were up nicely as well. So let's take a look at the numbers and the charts rather behind the numbers and see what we have here. The S&P 500. We started out the week a little bit on a negative note here. Well, actually, we started on a positive note on Monday and then sold off on Tuesday and Wednesday. And then, of course, we saw a little recovery yesterday and then gapped it up back up here towards the all-time highs in the S&P 500. So the market's been a little bit frustrating this year as we've been kind of just trading between bands of support and resistance and not really having much of a trend at all. It's just again, more sideways action, but with an overall slight upward bias, of course. And, it's been choppy. And once again, when we see that this market gaps up, it often closes near the highs. So for next week, I think what we want to see in here is that if we begin to pull back, we'll want to see that the 5-day moving average continues to hold as support, or does hold as support rather, that maybe we correct a little bit through time. Today we got a little bit extended, but, we've got the potential for resistance just above in this level. Perhaps we run up there and just continue higher, or if you bought into it today, then I'd say your worst case stop probably goes below today's low, and look for the market to kind of meet up with the 5-day moving average as the 5-day moving average advances to meet price action. So we're obviously still in a bull market here. Nothing's changed that. The Nasdaq held its trend line here for the year, and actually just going back to the S&P 500 for a moment, I pointed this out on Wednesday on StockTwits that the market was coming down to the year-to-date volume-weighted average price as well as that 38.2% retracement. It also happened to be where we found that 100-day moving average in this little low. So this is going to be an important level over the next few weeks, I think, down at about 207, and we're of course pretty far away from that right now, so it's not really a concern to think that we're going to get down below that, but it's a good level to be aware of. The Nasdaq, that is, again, we held this trend line, and when we look at the volume-weighted average price year to date, we didn't come down as far as the S&P 500 did. This was what I was expecting to be a potential band of support in this area because it is this prior support as well as the volume-weighted average price year to date. We do still have a downward slope to that 5-day moving average, and we've seen pretty choppy action in the Nasdaq, and we're right at the top of this little channel here with the lower highs that we've seen the last couple of weeks. So maybe early next week we pull back down in towards 107.50 to 108, and as long as we can hold above that, we'll at least be neutral on the intermediate term. But ideally we'd like to see there's this 5-day moving average start to rally up, and maybe the market pulls back to it. But again, we're in an overall bull market. Every time we see a pullback, people tell us it's the top, and we have to take it serious when we have a declining 5-day moving average from an intermediate term perspective, but we have to be flexible as always. The Russell 2000, as we know, did have a positive week, but we've still got some damage done in here from the sell-off 2 weeks ago. That is that we broke an important level of support at about 123.5 to 124, and so far this market remains stuck below that. So next week we're going to be looking at this market that it's a little suspect still until we can get back above and hold above 124. So the this market, maybe it pulls back a little bit deeper, and if you're looking at this chart the way I am, then you can see this is a left shoulder, this is a potential head, and we create a right shoulder that holds near about 122 and then can build some energy to break back above that 124. Until it can get back above 124, though, I'd say it remains a little bit suspect. This week we did see once again that the year-to-date volume-weighted average price was tested and held, and that's also right along that 100-day moving average, so that's been important. And obviously, the lows for this week are going to be an important level going forward. So, we've got the 50-day moving average just above. It has a slight slope lower to it, and this prior support has the potential to become resistance. So the Russell 2000 is saying be a little bit more cautious. Semiconductors, again, they had they were the weaker of the groups this past week. But they're kind of, as I've been saying to subscribers, they're in this area, they're just kind of a waste of time. They're just going sideways. In order to become positive on the semiconductors again, they're going to need to break above 57 and a quarter, and ideally, they break above that, pull back, test it, and hold, and then are able to continue higher once again. So semiconductors, we've seen a pretty choppy action in here. We did hold a key level of support once again, adding further importance to this 55 and a quarter level. So we're neutral as long as we're basically in between this band of support down below at 55 to 55 and a quarter, and the band of resistance at 57 to 57 and a quarter. Until it breaks that either direction, then we're just looking kind of neutral here. The primary trend on the bigger time frame is still higher, so we give the benefit of the doubt to the buyers, and it seems more likely that it would break out to the upside. But as always, we have to remain flexible and open-minded. The financials, this group broke some range in here today by gapping up and closing near the highs, but we're just back up to the top end of this range. And as we know, the financials have been pretty frustrating back and forth, and this has been their range. Here's our little band of support down there, and here's a band of resistance. And the midpoint of this range, we've spent a lot of time going back and forth between. It is constructive right now, but ideally for a breakout, we'd maybe want to see a pullback down towards 2460, which would create a higher low, and then build some energy for a breakout that could sustain it to test last year's high. And of course, that's multiple year highs as well. So financials are behaving better, and shares of Apple, I still don't see much advantage to being long in here on the daily time frame. We've just kind of got a big mess, so there's really not a whole lot going on in there. The bonds have been selling off as they broke support a couple weeks ago, and that support right in here acted as resistance, and that's what we have to be aware of the potential for in the Russell 2000, that this support has the potential to become resistance. And like I just said here, like we were just looking at on the TLT, that support did become resistance, and we saw a pretty strong sell-off. Now it appears as though the bonds maybe have some further bounce up towards 126 to 127 in the next week or two. But this market has been pretty heavily damaged. We've got a declining 10, 20, and 50-day moving average. So if you're trading bonds long, I wouldn't have a lot of confidence in them at this point. Let's take a look at some other stocks. As you know, I've been trashing Alibaba for several months now, and this past week we got to the point where it made a new all-time low, meaning that every single person that owned this stock prior to Tuesday was in a losing position. That is, if they bought it this year and were still holding. But from that failed breakdown came this fast move higher in earnings, and now it looks to me like here we've got resistance. We found a little bit of selling this week, found some resistance at the year-to-date volume-weighted average price. So the average price paid for Alibaba this year is right here at this moving average, and that's 87.60. So, the best case, I think, for Alibaba would be that maybe we see that this, prior band of resistance holds as support, and we get a little further pullback this week coming up. Maybe it pulls back down towards 85. But right now, the buyers have impressively regained control of the near-term trend, and what will be key for Alibaba to sustain a turnaround that might even get it up to the the VWAP since they came public up here at 95, is that we would want to see that this market does in fact hold support in this area. So So Alibaba will be interesting going forward. I certainly wouldn't suggest chasing it up in here, but if it can pull back, rebuild some energy, then perhaps the buyers can regain control for more than just a short period of time. Amazon looks like it wants to continue to move higher. The stock, as we know, broke out on earnings, and I don't know what happened to my chart there, but it's up near all-time highs. And if we take a look at a volume-weighted average price since that event, since the gap that is, we're right now battling with it, and it looks like the buyers are regaining control. This is going to be an important area of support for the stock over the next month or so, down near about 415, 420. But Amazon, you've got to give the benefit of the doubt to the buyers in here and say that they're now back in control. Another one I'd say to keep an eye on next week would be this St. Jude Medical, STJ. Broke out a couple weeks ago. It pulled back deep, and it's just been kind of turning sideways in here. The good news is that we made a higher low, so we've got a nice important higher low right there. When we look at the weekly chart, you can see that was a significant breakout, and on the monthly, it registers as important as well. So this is the type of stock that maybe an investor would purchase with a stop under here. Every day on Alpha Trends, I bring new swing trade and day trade ideas to subscribers, and setting up for next week, I think this is our key little band of resistance that is going to need to clear right now. If we take a look at the volume weighted average price since the event, we draw it from right here, and you can see we kind of got turned back from it today. So I think that 76 and a quarter is the likely area that we need to see broken for some bigger upside. So keep your eye on that one next week. I also think that Tesla is behaving well here. We've got a little bit of a band of resistance, and we're above a rising 5-day moving average. It's had a nice run recently, of course, but if we can get back above this level, perhaps it's headed for the next run higher. Thanks for tuning in. Hope you had a good week of trading, and I'll talk to you next week.